On March 11, 2021, the art world was shaken to its core. A digital collage made up of 5,000 images sold for an astronomical sum, instantly becoming one of the most expensive artworks ever. But this wasn't just about art. The real intrigue lay in the mystery surrounding the buyer and the motives behind the purchase. As headlines blazed and social media buzzed, it became clear that this was more than a simple auction. It was the beginning of a story that would captivate millions around the globe. The world's attention was glued to the Christie's auction. Over 22 million people logged in, eager to witness history in the making. The bidding started at a cool $1 million, but it didn't stay there for long. As the numbers climbed, the excitement was palpable. The auction became a spectacle, with bids soaring past $25 million in a matter of minutes. The anticipation built with every new offer, as viewers wondered just how high the price would go and who would ultimately claim the prize. As the auction neared its end, the tension was electric. A $50 million bid seemed to secure the artwork, but in the final seconds, a jaw-dropping $69 million offer stunned everyone. The digital art world had never seen anything like it. The sale wasn't just a record, it was a statement. The mystery deepened. Who would spend such a fortune on a digital file? The answer would soon send shockwaves through both the art and crypto community. Winning bidder was known only by a pseudonym, Metacavin. The internet erupted with speculation. Who was this mysterious figure? Was it a tech mogul, a secretive investor, or perhaps a collective? The name Metacavin became a global enigma, sparking debates and wild theories across forums and news outlets. For days, the art world was left guessing, as the true identity behind the record-breaking purchase remained hidden. Suspense finally broke when Metacavin was revealed as Vignesh Sundarsan, an Indian entrepreneur from Chennai. The revelation was as surprising as the bid itself. Vignesh, a self-made tech millionaire, had pulled off one of the most talked-about moves in both art and crypto history. Even more astonishing, the $69 million spent on the NFT was less than 10% of his total net worth, highlighting just how deep his resources ran. Vignesh's story began in 1988 in a middle-class family in Chennai. His father, an engineer, hoped his son would follow a similar path, but Vignesh had other ideas. Inspired by icons like Steve Jobs and Dr. APJ Abdul Kalam, he dreamed big. Even as a high school student, he was already building websites for US companies, earning $20 per project. His early drive and ambition set the stage for the extraordinary journey that lay ahead. Growing up, Vignesh looked up to visionaries who had changed the world through technology and science. Steve Jobs, with his relentless innovation, and Dr. APJ Abdul Kalam, who rose from humble beginnings to become a renowned scientist, were his role models. These influences shaped Vignesh's mindset, fueling his desire to break boundaries and create something impactful. His journey was just beginning, but his ambitions were already sky-high. While working on automating bank transfers, Vignesh stumbled upon Bitcoin, which was trading at just $10 per coin at the time. He immediately saw the potential in this new digital currency. Recognizing the need for a platform where buyers and sellers could trade, he launched his first crypto exchange. Coincy. Vignesh understood that blockchain technology was decentralized, supply was limited, and its popularity was bound to grow. Coincy was Vignesh's first major foray into the crypto world. He saw an opportunity to connect buyers and sellers in a market that was still in its infancy. The exchange quickly gained traction, attracting users eager to trade Bitcoin and other cryptocurrencies. Vignesh's vision and technical skills allowed him to carve out a niche in the rapidly evolving digital economy, setting the stage for even bigger ventures. Vignesh quickly grasped the revolutionary potential of blockchain technology. He understood that decentralization meant no single entity could control the system, and the limited supply of coins would drive demand. His early investments and ventures were guided by this insight, positioning him as a forward-thinking player in the crypto space. The foundation was set for the bold moves that would follow. As Vignesh's profile grew, so did the controversies. His ventures began attracting scrutiny, with users and investors raising concerns about transparency and accountability. The rapid pace of growth sometimes outstripped the ability to manage operations smoothly. These early warning signs hinted at the challenges that would come to define his career in the crypto world. Coincy. Vignesh's first exchange soon faced trouble. Over 50 users accused him of failing to return thousands of dollars. Vignesh defended himself, claiming that the platform's rapid growth had overwhelmed its infrastructure. Despite his explanations, many users were never refunded, and the controversy left a mark on his reputation. It was a sign of the growing pains that often accompany new technology ventures. Vignesh's next venture, Bookence, aimed to bring crypto ATMs to the masses. However, the startup was abruptly shut down by his partners, who feared industry-wide hacks and security breaches. Vignesh exited the company with no financial gains. The experience was a setback, but it also provided valuable lessons about the risks and volatility of the crypto industry. Android, a crypto lending platform, was another ambitious project. Vignesh raised funds at a $48 million valuation, but soon after, investors claimed he stopped working and became unresponsive. The controversy deepened, with many feeling abandoned. These repeated issues began to cast a shadow over Vignesh's growing empire, raising questions about his business practices. Despite setbacks, Vignesh made a bold move by investing $6,000 early in Ethereum. This single bet would change everything. As Ethereum's value skyrocketed, Vignesh suddenly had the capital he needed to fund his next big idea. It was a turning point, providing the resources to execute a plan that would make headlines around the world. Newfound wealth, Vignesh set his sights on something bigger. He realized that the NFT wasn't the real prize, it was the bait. He needed capital, a desirable asset, and a way to generate hype. By buying Beeple's NFT art for $2.2 million in December 2020, he set the stage for a much larger play. The pieces were falling into place for a masterstroke in the digital economy. Vignesh knew he couldn't just ride the wave of someone else's success. He needed his own engine, a way to control the narrative and the profits. That's when he decided to create his own crypto token. By launching MetaPurse, a public fund for investing in NFTs, he invited others to join the ride, but on his terms. The stage was set for the next phase of his plan. Centerpiece of Vignesh's strategy was the B20 token. Investors in MetaPurse didn't get traditional shares. Instead, they received B20, a new crypto coin he created. This innovative approach allowed him to build a community of supporters and speculators, all eager to profit from the NFT boom. The B20 token became the fuel that powered his ambitious plan. Total of 10 million B20 tokens were created. The distribution was carefully planned, with allocations for the team, the artist, and public investors. This structure ensured that Vignesh and his close associates retained significant control, while also creating the appearance of a broad, decentralized project. The setup was designed to maximize both hype and profit. With the B20 token in place, Vignesh orchestrated a campaign to generate maximum excitement. Social media buzzed with speculation, and investors rushed to buy in, hoping to catch the next big wave. The anticipation reached fever pitch as the Christie's auction approached. The plan was working perfectly, with every move calculated to drive up demand and price. On the day of the Christie's auction, the B20 token price soared. Investors watched in awe as the value climbed by thousands of % in just weeks. The connection between the auction and the token was clear. As the NFT's price rose, so did the value of B20. It was a textbook example of how hype and speculation can drive markets to dizzying heights. Within just 2 months, the B20 token's price skyrocketed by an astonishing 7,500%. Early investors saw their holdings multiply, and the frenzy only intensified. The digital economy had rarely seen such rapid gains. For a brief moment, it seemed like everyone involved was winning, but as history has shown, bubbles don't last forever. After the auction, the excitement faded just as quickly as it had arrived. The B20 token's price collapsed, falling from its peak to a mere 7 cents. Thousands of investors who bought in at the top were left with massive losses. The dream of easy riches had turned into a harsh lesson about the risks of speculation and the volatility of digital assets. In a final twist, it was revealed that Beeple, the artist behind the record-breaking NFT, held a 2% stake in MetaPurse. This meant he also profited from the B20 token's surge. The revelation added another layer to the story, showing how interconnected the players were and how the hype benefited those at the very top. Story of Vignesh Sundarsan Akametakavan raises a fundamental question. Was he a genius or a grifter? His strategy was undeniably brilliant, exposing the power of hype in the digital economy. Yet the fallout left thousands with worthless tokens and a sense of betrayal. The debate continues, with supporters praising his vision and critics calling out the ethical gray areas. Supporters argue that Vignesh was a brilliant strategist. He saw opportunities where others saw chaos, and he executed a plan that captured the world's attention. By leveraging new technology and understanding the psychology of markets, he exposed the immense power of hype in the digital age. For many, his actions were a masterclass in innovation and risk-taking. Critics, however, see Vignesh as a grifter. They point to his history of unresolved complaints and failed ventures, as well as the sophisticated pump-and-dump scheme that left thousands of public investors with worthless tokens. While his actions may not have been illegal, the ethical questions remain. Was this financial innovation or just another scam in a new digital disguise? Despite the uproar, Vignesh never faced criminal charges. His actions, while controversial, were technically within the bounds of the law. This fact highlights the gray areas that exist in the rapidly evolving world of digital assets and crypto markets. The lack of regulation allowed him to operate freely, raising important questions about oversight and accountability. This story is a stark reminder of the realities of the virtual world. In the digital economy, fortunes can be made and lost in the blink of an eye. Hype, speculation, and innovation collide, creating opportunities and risks in equal measure. For every winner, there are often many losers. The line between genius and grifter is often blurred. Saga of the $69 million NFT Heist offers important lessons for anyone navigating the digital economy. It shows the power of narrative, the dangers of unchecked speculation, and the need for greater transparency. As technology continues to evolve, so too will the opportunities and the risks. Staying informed and cautious is more important than ever. History has a way of repeating itself, especially in the world of finance and technology. The next bubble is always just around the corner, fueled by new innovations and the promise of quick riches. The story of Metakavan and the B20 token is just one chapter in a much larger saga. The cycle of hype, boom, and bust will continue as long as human nature remains unchanged. The sale of Beeple's NFT marked a turning point for digital art. Suddenly, digital files could command prices once reserved for masterpieces on canvas. Artists, collectors, and investors all rushed to explore this new frontier. The boundaries between technology and creativity blurred, opening up endless possibilities and new risks. NFTs, or non-fungible tokens, are unique digital assets stored on a blockchain. Unlike cryptocurrencies such as Bitcoin, each NFT is one of a kind, making them ideal for representing digital art, collectibles, and more. The technology promises to revolutionize ownership and authenticity in the digital age, but it also introduces new complexities and challenges. In the digital economy, hype can be as valuable as the underlying asset. Social media, influencers, and viral trends can drive prices to unimaginable heights, but when the excitement fades, values can collapse just as quickly. The B20 story is a perfect example of how hype can create and destroy fortunes overnight. For investors, the lesson is clear: caution is essential in fast-moving markets. The promise of quick profits can be tempting, but the risks are real. Understanding the underlying technology, the motivations of key players, and the potential for volatility is crucial. In the world of NFTs and crypto, fortunes can change in an instant. As digital assets become more mainstream, the need for regulation grows. Clear rules can help protect investors and ensure fair play. However, regulation must balance innovation with oversight, allowing new ideas to flourish while preventing abuse. The story of B20 highlights the challenges regulators face in keeping up with rapid technological change. B20 saga affected thousands of investors and NFT enthusiasts. Many were drawn in by the promise of easy gains, only to be left with losses. The experience has sparked debates about responsibility, transparency, and the ethics of digital finance. As the community reflects, the lessons learned will shape the future of the NFT space. The line between innovation and speculation is often thin in the digital world. New technologies create opportunities, but they also attract those looking to make a quick profit. The B20 story is a reminder that not all innovation leads to positive outcomes. Careful evaluation and skepticism are necessary to separate real progress from empty promises. For Beeple, the artist behind the $69 million NFT, the sale was life-changing. It validated digital art as a legitimate and valuable form of expression. Yet the financial machinations behind the scenes also raised questions about the true value of art in the digital age. As artists navigate this new landscape, they must balance creativity with commercial realities. Vignesh Sundarshan's journey is a testament to the power of vision and risk-taking. From humble beginnings to global headlines, he leveraged technology and timing to achieve extraordinary results. Whether seen as a genius or a grifter, his story illustrates the mindset required to succeed and survive in the fast-paced world of digital innovation. For many investors, the B20 saga ended in disappointment. The promise of quick riches gave way to losses and regret. The experience serves as a cautionary tale about the dangers of following hype without due diligence. In the ever-changing world of crypto, careful research and skepticism are essential for survival. Media coverage played a huge part in fueling the B20 hype. Headlines, interviews, and viral posts amplified the excitement, drawing in more investors and speculators. The story shows how media can shape perceptions and drive market behavior for better or worse. In the digital age, information spreads faster than ever, magnifying both opportunities and risks. Despite the setbacks, NFTs remain a powerful force in the digital world. Artists, collectors, and investors continue to explore new possibilities. The technology is still evolving, and its full potential has yet to be realized. As the market matures, new standards and safeguards will likely emerge, helping to protect participants and foster sustainable growth. The story of the $69 million NFT heist is just the latest in a long line of financial bubbles and manias. From tulip mania to dot-com stocks, history is full of examples where excitement outpaced reality. The lesson is clear: while technology changes, human nature does not. The next big bubble is always just around the corner. As we look back on the events surrounding the $69 million NFT sale, one thing is certain: the digital world is full of surprises. Innovation, speculation, and controversy will continue to shape the landscape. Whether you see Metacavin as a genius or a grifter, his story is a powerful reminder to stay curious, cautious, and always ready for the next twist in the tale of technology and finance.